Coinbase just joined the S&P 500. Let that sink in. A cryptocurrency exchange is now part of the most iconic index in global finance. This isn't just a milestone for crypto, it's a signal that digital currency is reshaping the global economy. In this video, we explore how digital assets are going mainstream and what it means for money, markets, and power. Part 1. The rise of digital currency. Digital currencies are no longer fringe experiments. From Bitcoin and Ethereum to stablecoins and CBDCs, central bank digital currencies, digital money is rapidly entering the financial mainstream. There are two parallel revolutions happening right now. 1. Decentralized digital currencies, built on blockchain, outside government control. 2. Centralized digital currencies, issued by governments, designed for control and speed. Together, they're forcing a redefinition of what money is, who controls it, and how it moves. Part 2. What Coinbase joining the S&P 500 really means. When Coinbase, ticker COIN, was added to the S&P 500, it was more than a stock story. It was a validation. The S&P 500 only includes large-cap, profitable U.S. companies with strong market capitalization and investor confidence. Coinbase being included sends a message to Wall Street and Washington alike. Digital finance is no longer experimental. It's foundational. It also means institutional money now has exposure to the crypto economy, whether they like it or not. ETFs, index funds, pensions, millions of investors now own a piece of crypto infrastructure, passively. That changes the game. Part 3. Digital currencies' impact on global finance. Let's talk global impact. Here's how digital currency is already transforming finance. 1. Faster, cheaper cross-border payments. Blockchains like Solana or Stellar can move money internationally in seconds, not days, without relying on SWIFT or legacy banks. 2. Financial inclusion. People without bank accounts can store and move value with just a smartphone, especially in emerging markets like Nigeria, India, and El Salvador. 3. De-dollarization pressure. As countries like China and Russia explore CBDCs and digital trade settlements, the dominance of the US dollar is slowly being tested. 4th, programmable money. With smart contracts, you can set conditions for spending, lending, or collateral automatically. This level of innovation is unthinkable with traditional fiat systems. Part 4. The risks and challenges ahead. But it's not all bullish. Digital currency brings real risks. Volatility. Bitcoin still moves like a tech stock on steroids. Regulatory uncertainty. The SEC, CFTC, and global regulators still can't agree on how to classify crypto assets. Centralized choke points. Even decentralized currencies often rely on centralized exchanges, like Coinbase. Cybersecurity and fraud. Hacks, rug pulls, and lost keys continue to haunt the space. And with CBDCs, there's concern about privacy and state surveillance. What happens when every transaction is traceable? In short, the future of digital currency depends on how we balance innovation with regulation. Part 5. Where the market is headed. Next, let's zoom out. The digital currency market is evolving fast. Bitcoin ETFs are gaining traction. Ethereum is moving toward scalability and real-world utility. Layer 2 networks are reducing costs and improving speed. Institutions like BlackRock and Fidelity are quietly building. Meanwhile, central banks around the world are racing to launch CBDCs. Over 130 countries are actively exploring or piloting digital currencies. This isn't a matter of if, it's a matter of how fast. And with Coinbase now in the S&P 500, Wall Street can't ignore it any longer. Part 6. What it means for you. So what does all this mean for everyday people? More access to financial tools without needing a bank? Lower fees on global payments and transfers? Exposure to new investment vehicles via crypto ETFs or tokenized assets? New risks, including volatility, scams, and lack of recourse. Most importantly, we're entering a world where money is no longer just paper or numbers in a bank. It's code, it's programmable, and it's borderless. That changes everything. Final thoughts. The inclusion of Coinbase in the S&P 500 is more than symbolic. It's a tipping point. It tells us that digital currency is no longer the future. It's the present. And as blockchain-based money becomes the backbone of everything from payments to investment to lending, the global economy will have to evolve or be left behind. Whether it's Bitcoin, stablecoins, or CBDCs, the age of digital money is here. If you found this breakdown helpful, subscribe to Finance-Related 101. We make complex economic shifts easy to understand, so you can stay ahead of what's coming next. Thanks for watching. Now, go decentralize your knowledge.